Whoa, Pi Network just took a nosedive. What in the crypto cosmos is going on? Pi coin just tanked by almost 16%. Let's break down this sudden drop. What's up, my Pi-loving prospectors and crypto-curious crew? Welcome back to Gold Rush Crypto Daily, where we dig into the details, even when the charts aren't looking so shiny. I'm your guide, Goldrush, and today we're tackling the big question on everyone's mind. Why is Pi Network down? In this video, we're dissecting the brutal 15.6% drop in Pi coin's price. We'll explore the potential reasons behind this sudden sell-off, from profit-taking to minor liquidations, and even some red flags raised by the community. Is this just a temporary dip, or is there more to this story? You absolutely need to watch until the end, because we'll also discuss potential scenarios and what this means for your Pi holdings. All right, let's get straight to the numbers. Pi Network's token has plummeted by nearly 16% in the past 24 hours. We're looking at a current trading price of around $1.14, with a market cap hovering around $7.85 billion. And get this, the reported circulating supply of Pi is a massive 6.88 billion tokens. Now, let's put this into perspective. Since its launch on February 20th, Pi is already down a whopping 62% from its all-time high of $2.99. And it's been trading in the red for over 20 days straight. Since the start of March, Pi hasn't even managed to climb above the $2 mark and has shed over 34% of its value in just the last 2 weeks. That's a serious downward spiral, folks. While the Pi Network still boasts a strong following on social media, it looks like investors are starting to offload their holdings, and this increased selling pressure is definitely contributing to the token's declining value. But what's behind this sudden rush to the exits? Well, the naysayers on X are pointing to some potential red flags. There are rumors swirling that the top 3 Pi holders collectively own a staggering 2.69% of the total supply, with the top 10 holders controlling the same percentage. Some community members are understandably finding this level of concentration a little alarming. This lack of transparency about the distribution of Pi tokens could be spooking some investors. High concentration of ownership is always a concern in the crypto world. It creates the potential for whales to manipulate the market, and it doesn't exactly scream decentralization, does it? Adding to the potential frustration is the ongoing saga of a Binance listing. Remember that poll where a massive 86% of Binance users voted for Pi to be listed? That poll started way back on February 18th and ended 10 days later, but still, no Binance listing. This could be another factor contributing to the negative sentiment. Many investors see a Binance listing as a crucial step for increasing liquidity and mainstream adoption. The continued absence could be fueling doubts about the project's progress. Let's dive into some technical analysis. According to analysts going by the name Alpha Crypto Signal on X, Pi was showing signs of weakness over the weekend. And as predicted, it broke below a key horizontal support level, which triggered the sharp sell-off we're seeing now. Looking at the charts, the price has indeed tanked across multiple timeframes since the start of the business week. On the 15-minute chart, Pi is down over 5% and trading just above its moving averages. The 4-hour chart paints an even more bearish picture, with the token trading well below its 20-day exponential moving average. The technicals are definitely screaming downtrend right now. But perhaps one of the most significant factors contributing to this price drop is the expiration of Pi's grace period on March 14th. Remember, the developers had urged users to complete their KYC verification before this deadline to avoid losing a significant chunk of their mined Pi tokens. After the grace period ended, mining rewards no longer accumulated under the previous terms. It appears that many miners who either missed the deadline or decided not to complete KYC have started liquidating their holdings. This sudden influx of supply hitting the market is undoubtedly putting downward pressure on the price. The developers' warning about losing tokens might have also inadvertently created some fear, uncertainty, and doubt, good old FUD, within the community, further contributing to the selling pressure. And finally, let's talk about a potentially ominous technical pattern. Pi's technical analysis suggests that this bearish momentum could continue in the near term. They've identified a classic head and shoulders pattern forming along the resistance trend line of a descending channel. For those not familiar, this is a setup that typically signals further downside. This pattern was reportedly confirmed when PI coin broke below the neckline and closed a candle beneath it on March 14th. This kind of move often precedes significant price declines, increasing the likelihood of even more losses if buyers don't step in at key support levels. Traders are now watching to see if PI will retest that neckline. If the price stays below the $1.50 mark, it could indicate a continuation of this downward trend. However, a break above the resistance zone around $1.70, coupled with strong trading volume, could potentially invalidate this bearish setup and lead to a rebound. That head and shoulders pattern is definitely not a bullish sign. It suggests that the bears are firmly in control right now. However, in the crypto world, anything is possible. A sudden surge in positive news or unexpected buying pressure could certainly change the narrative. All right, my Pi-curious comrades, we're digging deep into this price drop. If you're finding this analysis helpful and you want to stay updated on all things Pi Network and crypto, then smash that like button right now. And if you haven't already joined the Gold Rush Crypto Daily family, hit that subscribe button and ring the notification bell so you don't miss any of our future updates. So, where does Pi Network go from here? The short-term outlook looks bearish, but the long-term potential still remains a question mark. The success of the project hinges on the launch of its open mainnet and the real-world utility it can provide. If the developers can address the transparency concerns, secure listings on major exchanges, and foster a thriving ecosystem, there's still a chance for a comeback. However, the current price action is a stark reminder of the risks involved in investing in pre-mainnet cryptocurrencies. So what are your thoughts on this Pi Network price drop? Are you buying the dip, holding on tight, or heading for the exits? Let's hear your strategies and predictions in the comments below. If you found this in-depth analysis helpful, please give this video a thumbs up, subscribe to Gold Rush Crypto Daily for more honest crypto updates, and hit that notification bell. Thank you all for watching. Stay safe out there, and be sure to check out our other videos for more crypto insights. And finally, remember this is just my analysis and opinion. I'm not a financial advisor. This is not financial advice. Always do your own research before making any investment decisions.